Hey everyone, this is a trader investor coming to you with our analysis on the SPY rollover. I've said the SPY wants to roll over. We have a divergence between the SPY making higher highs and price making lower highs in the oscillator. So price is making higher high, oscillator is making lower high. So when we have this divergence, opposite directions, it tells us it's time for the markets to roll over. How deep they roll over, we have no idea. We never know how deep they roll over. We can just speculate, we can just guess. But if we think of a correction scenario, meaning 20% correction, then we could go a 20% correction, right? And I'm not saying that's where we're going. I'm just saying if we go to a 20% correction, it might even be easier to look at it on the daily. 20% correction is somewhere in this order block area, somewhere around the 320 to 340 area. Somewhere around here is a 20% correction. And please, I'm not saying we are into a 20% correction. That's not what I'm saying at all. I'm just saying when a market wants to have a pullback like this one, and sometimes we can even estimate how far this pullback goes by looking at Fibonacci extensions. And if we look at that, this is how far it can go. Right, and if I extend this out for easy viewing, it says we can go as far down as 402, but I'm guessing we're going to go as far down as 400 because I'm guessing we're going to close this gap, right? If we reach this far, we might as well close this gap, right? That's of course nobody says and does what I have to do, but I'm just saying if we go down this far, we're more likely going to go close this gap here. That's a very likely scenario. So that's what I'm anticipating the SPYs to do, and that's how I'm preparing all of my positions. But here's what I have marked here. I have marked here an area that I called break of structure. What that is if this be the lowest we can go for now. If that is the case, then I want to see a close above this line. I want to see a high made, and that high has to be a close above this high. Right now, the bar that we formed at the end of cash market hour today shows we've made that high, but I'm not comfortable with that high yet until we close above this line here. So that's one thing that has to happen. Then we have to form a higher low for price to continue its movement up, and from that point on we can enter and say this correction is done. This correction is done. We have a break of structure of the hourly. Then based on that break of structure on the hourly, we can enter our position, because my expectation is for this divergence to have taken care of itself and for price to resume if the structure is broken. If the structure is not broken and we end up breaking these lows, then the door is wide open for that move down. And it's not going to be a straight move down, it's going to be moved down by a series of lower highs and lower lows. We're going to keep doing this until we get to our destination, which is either this order block here. If we go this far, this is going to be a pretty significant retracement, or it's going to close this gap here. My guess is we want to close this gap, because this gap here is let's draw it here. That's not what I wanted to do. This is what I want to do. This gap here is an imbalance. You always see me struggle with drawing this imbalance because I want to have a perfect line. There's an imbalance here. So between this high and the next bar high, or the third bar high, because there's a gap, I'll just leave it at this as the imbalance. But usually between 3 bars, wick low to wick high, or wick high to wick low in an uptrend, you don't want to see any gap. Wick to wick, they need to match. If they match wick to wick, for example here, if you see this wick high has been closed by this wick low, so there's no imbalance. There was a short-term imbalance, but that was closed immediately. If you look at this bar here, if you look at this bar wick high and this bar wick low, they match, so there's no imbalance here. This bar wick high, there's nothing higher than it, so there's no imbalance there. And on the way down, same thing happens. And here in this instance where we have this imbalance, we closed that imbalance today. We really took care of that imbalance today. I had identified it in my video this morning where I was talking about my position in the SPYs. I took a position on the way down, anticipating that we're going to close that imbalance left a few days ago from 414, and when we opened on 415, that was the imbalance that we left open. So based on that imbalance, I was expecting price to come down here. I took my position off once we closed this imbalance, but you know, lo and behold, price went even further down. But that's okay, because this was an hourly order block, and I didn't have the time to keep monitoring the trade to take it all the way down, so I closed my position. But the important part is we have gaps, they will close. Imbalances, most of the time they will close. They don't have to, there is no requirement, but they will close. Algorithms, that this institutions that are using algos to trade, they don't like these gaps, so they will close these gaps. So now my next anticipation is then the same gap that we closed, we open it up again. We have an imbalance when we gap down. When we didn't gap down, but when price went straight down with no price moving it up. So we have left this imbalance. We've started to negotiate that imbalance. We're starting to get into it, but we have not closed it yet. So if we get into this imbalance midpoint with a close and we make a higher low, then it is safe to assume we are done with the pullback. Otherwise, we have broken some lows already. Now we have what we want to call as double bottoms. This is liquidity. So when we have liquidity, what do we always do? We are careful before we enter liquidity. We are extremely careful before we enter liquidity, because price can come down here and manipulate fake manipulation, fake moves, showing I'm going to break out, but it's not a real breakout because there are stops up here. It reverses to collect those stops, and then all those people who get long here because they see this reversal, they are also trapped because now it wants to do this. This is a real move that it wants to do. So let's not be in a hurry to enter any short position, any put position when we see a break of these lows. This is a liquidity area that could be manipulated because we have, you know, triple bottom actually. So we touched it, quadruple maybe, even if you count this one is low enough, because a support area is a zone, not a specific point, right? So we went there 4 different times and all 4 times bounced. But right now, if we see a break, and a break meaning a close below it, if we have a close below it, be careful, it could be a fake breakout, but price will continue to go in that direction. And another thing that could happen is we have a strong break and we never come back to that high. So this would be a safe zone to enter. Anywhere here would be a safe zone to enter. So let's watch out. Let's just make sure we don't get manipulated out of positions. Let's look what the institutions are telling us before we enter. But overall, the SPY has started the rollover. It was expected to roll over because we have seen the divergence. You could use a MACD RSI, you would see this divergence. So once we see this divergence, we have this rollover. How deep will it go? Price will just keep telling us. As long as it's making lower highs, we're gonna keep riding it down. When it decides it wants to reverse, then we also pause and reverse with it. So my next target now is somewhere in this imbalance here, and we have the daily order block way below here. If we get into this daily order block, we're more than 10% correction. So this is some deeper correction. Maybe not 10%. 417 times 0.9. So yeah, so not quite 10%. I just did a calculation. So 10% would be in this second set of order blocks, which is in the 375 area. So the rollover has happened, and I just wanted to make sure that you are aware that this rollover has taken place, and we are prepared for action. We are prepared for action. We took this position. We are happy with this position. I took a position to the long side earlier yesterday that immediately reversed. That's okay. So I took it at the open, actually, thinking that we were going to close this gap. That was my expectation. That didn't happen. So I closed that position very quickly for a very small loss so that I could capture on the way down, which I did. And I left the position open overnight, and once we closed this imbalance, I took care of it. So all in all, to say, look at the structure, look at where price is breaking, look at where price wants to head to. Price wants to head to imbalance, price wants to head to order block, price wants to head to supply zone, demand zone. So find those, identify those. I have a couple of videos that really go into the tutorial on how to identify these areas. So once you identify them, those become your target. Imbalances for me are exits, not entries. I don't enter off of imbalances. I enter off of order blocks. I enter off of daily order blocks, but with the hourly time frame to find that break of structure on the hourly to continue my long-term daily momentum. That's what I use. And here I have drawn the hourly order block just so that I can see, I can visualize where price is coming to a stop. Right now, it looks like it wants to stop at this order block. I want to see what it does around this imbalance. That combination with a higher low is our indication that as we make new higher highs, that we're reversing back up to make new highs. That's my expectation, but that's not what I predict. I only trade what I see, and right now I see a pullback that has not shown any sign of termination. We are continuing to make that pullback until we are done with that pullback, until this liquidity is cleared, until these imbalances are left hanging and price just keeps going down. My bias is still to the downside on the SPYs. And just real quick, without going into further details, Q's, same story. It's in a pullback. IWM is quite interesting because IWM is in a pullback, but IWM is also in a potential consolidation. If we have this consolidation and price reverses from here, if price reverses from here, then this area becomes our terminal shakeout, because this would be then our accumulation or reaccumulation, because we're coming from up here. So this area could be our reaccumulation. When I did the accumulation based on this, before we broke out here, when I said this was my accumulation, this is terminal shakeout, I also acknowledge that this could be a higher time frame we look at, because we did not break the consolidation, this distribution area or accumulation area. I'm still holding on to IWM trades. I'm not in a hurry to have IWM trades. I want to see if this is a true terminal shakeout, or if price has already said I am done, I'm not going to do anything else to the upside, I want to go down, which means price will come to this test area and continue down. If that happens, then that's my entry for the downside. So until that happens, we are just patiently waiting. It's all about patiently waiting and not about trying to find 5 minute, 1 minute charts to trade from. And finally, the diamonds. The diamonds, same story. In a downtrend, in a pullback, have come to an hourly order block. Again, this is not my intention to trade off the hourly order block, but because we're in a pullback, and if this hourly order block happens to show that this is the termination of that order block, this imbalance is taken care of, then I want to set up for my long position. I don't want to miss the long position because we have not had a very deep pullback. Any pullback that terminates is terminated. So I want to see that termination, but I'll be a little bit more cautious as to my positions because we're making lower highs. I want to see the break of the recent highs to really say we're done with the pullback, because price could always do this, right? It could make a lower high and continue its way down. We never know. We only trade what we see. That's why risk management is important. That's why we analyze our trades. We anticipate what's going to happen. If X happens, I'm exiting with a profit. If Y happens, I'm exiting with a loss. What's my Y? What's my X? What's my risk amount? This is important questions to ask. And then we look at the charts to tell us which way to play. So all four markets are in a pullback, and we have yet to see one that shows the significant strengths to say I'm leading us out of this pullback. Right now they're all leading us into the pullback, with IWM, I believe, the strongest leader downwards. Even though it's been consolidating, it hasn't made new highs, right? It's been coming down from highs and not even reaching near those highs. It has made significantly 1, 2, 3 lower highs, 4 lower highs, and is continuing to make its lower highs. I want to see if this consolidation area is accumulation or distribution. Once we analyze that and figure that out, once the charts tell us, right, figure it out, meaning once the charts tell us what they want to do, that's our next step. So with that, I want to remind you, don't forget to like this video. That's what tells me I am doing my job of coaching and teaching and bringing you information that you can use for your own analysis and for your own trades. I don't advise on entries. I just coach you on what I know on my charts, and based on that you will take action for your account. Take care everyone, and I'll see you in the next video.